Taking a look at today's interest rate markets, let's look at the 10-year note futures as they continue to realize higher price action today. 10-year note futures higher for a sixth consecutive session, and today we're looking at the futures market up slightly on the day, holding the 110 handle for that September future, which is now the most actively traded future, and currently priced at 110.11, just off the intraday highs as the markets continue to maintain this upward momentum going into the non-farm payrolls report tomorrow. Now, today, it appears one of the drivers was the weekly jobless claims, which came in higher than anticipated, really somewhat reinforcing the data throughout the week as ADP came in below expectations. And we also did see some shifting dynamics as far as what would be perceived, I think, by the Fed as a balancing of the labor market throughout the week and the data points. And tomorrow we'll get further indication, which is the preeminent report, I guess, for the month as far as how the Fed looks at the non-farm payroll data coming out for the month of May. And when you look at price action today, with today's levels, the 10-year note yield is down 1 basis point today to what do we got? 427.5 basis points, basically. So that is the lowest level for the 10-year note futures, equaling yesterday's low. But also, when you look back over the last couple of months, it is a little bit over a 2-month low for the yield component of the 10-year as prices continue to push towards the top end of the range. And we're seeing, again, pretty muted reaction today, but nonetheless, lower yields by about a half a basis point across the entire curve from the 2-year all the way up to the 30-year. So a little higher price action in various durations. But again, it does feel like, at least after the move higher that we have experienced in most of the Treasury markets, today's kind of a waiting day until tomorrow's highly anticipated non-farm payrolls.